The countdown begins. I'm your host, Steve Van Metre, and thanks for joining me today. In our show today, just 4 weeks remain before the year's most devastating market shock is unleashed. And we're going to show you what that is, and there's a reason why every Sunday we look at the technicals, momentum, and machine positioning to help you better prepare for what is coming and to take advantage of it. And now we're going to head over to Goldman, where I want you to start to see the broad positioning here in the market from what the experts are saying, because most investors are rather bearish right now. They're looking at the economic data, they're looking at the headwinds from around the world, and they're mispositioned. And one of the challenges here is everyone starts to look at the equity market and say, well, it seems to know what's coming in the future. Well, it doesn't always know, and one of the problems here is going to pull people back in at the wrong time. But now let's head over to Goldman, where we get the setup for what's coming over the next 4 weeks, because they see a year-end rally and recession in name only. And that's the issue that we're facing, because during the week, we look at the economic data, we see all around the world, everything is slowing down. And we know historically, when financial conditions are tight, this is usually not a bullish setup for equities. But one of the challenges is, if we see stocks rally, and we're going to make the case of why they are, well, it pulls everyone back in believing that the data is going to flip. The problem that's going to happen is when the data doesn't flip, all these investors and money managers, hedge funds, you name it, they're all going to be on the wrong side of this market at the worst possible time. And here we can see the bigger they are, the harder they fall. The smaller they are, the harder they rally. And here's what they're looking at. Global equity, CTA, short cover demand. We've talked about the machine positioning. It's a big issue here. And how about this? The global fixed income, CTA, short cover demand. Because one thing that investors really get bullish about on the equity side is lower interest rates. They think that's a big tailwind for stocks. And at this stage in the cycle, it doesn't mean that at all. We see corporate VWAP demand engage best 2 months of the year as equities are in the buyback windows. Corporates look to buy. Liquidity for the market is rising. Index gamma is up, and we're seeing short covering at the Goldman Sachs Prime Index, largest macro covering in 6 weeks, as everyone who's short's getting out of those positions. Risk parity and vol control supply are being reduced. Sentiment is negative, that's the problem, but that's going to switch because this is the best seasonal of the year. And here's a big issue. Money market mutual funds are sitting on more than $8.3 trillion in cash. Now, we know all of that money is not going to come out into equities, but you watch. If we see stocks rally here, money is going to come out of cash into the markets. Not all of it, but enough. If you get even a fraction of that really pushing the market, you can see a huge rally going to the year end, and that doesn't mean you're going to be positioned correctly for what is to come. But let's go on and make the case for why what's coming in December is going to be one of the most bearish setups that you can imagine. And let's start with the machine positioning. Here we see global equity CTA update. As the machines are short $134 billion, the largest short position since November 2018. So this is even a bigger short position than the banking crisis, even bigger than the pandemic. So you see the machines are at these extreme short positions. And when the market rallies, well, they lose twice because they miss out on the market rally and they're short, so they take a hit. And that's why when markets rally and these machines are short, they come off of those positions quickly, and that puts a big tailwind behind equities. And what Goldman's saying is we got a green sweep coming in a big way. And over the next week, flat tape, they're buying $78 billion of global equities, $40 billion in the S&P in an up tape. And we're going to make the case of why this is the base case. $114 billion to buy, that's a ton of money. Nothing compared to that $8.3 trillion in money market mutual funds. But $42 billion in the S&P, that is a solid number. Over the next month, look at this, a flat tape. This means stocks just go sideways. $142 billion to buy, that's huge. We can note that over this next week, half of that is being front loaded, $69 billion in the S&P. So this next week is big and critical for the markets. But look at this, in an up tape, $293 billion to buy, $79 billion in the S&P. And here you can see systematic positioning in U.S. equities remains skewed to the wrong direction. The market's rallying, and that means machines have to play chase. Now, one of the things is people think that the machines actually lead the market. No, they are trend following. Keyword is they're following. So what you see here is if the market's rallying, they're short, they've got to cover in a big way, and that puts a big buying spree right behind the equity market at a time everyone thinks a recession is coming. The problem is, it is. But what about the corporate demand? 79% of the S&P is currently in the open window. What's coming in 4 weeks is December 8th. And that one you should mark onto your calendars because that's when the corporate share buyback blackout closes out for the year. And I want you to start to see the setup. You have all of this corporate buying that's crunched down into a very concentrated period. And on top of that, you have machines that are deeply short, going far back to 2018. They've got to come out of those shorts and buy. And next thing you know, you get a huge surge in the market going into the beginning of December. And then what happens? All of a sudden, momentum dries up. The buyers disappear. The machines are tapped out. The corporates go dark. And what happens? The data continues to get worse. We estimate $5 billion of daily VWAP demand during the open window, with some of the largest repurchasers coming back online this week. November and December are the best 2 months period for executions of the year. And for those corporates running a lower execution pace year to date, November would be the month to increase or above our expectations. And again, they've got to get this done before the end of the year. And now let's take a look at how these machines are positioned. And you're going to see they're going to be triggering buying signals across the board. The good news is we give you all of the tools to know exactly where the machines are going before they get there. Here we can look at TD Securities. You're over 44.35 to buy, so you don't need much of an upside move in the S&P before that triggers. Under 43.35 to sell. Let's take a look at our own screens here because we see momentum positive on the S&P. In fact, back on November 3rd, we triggered a buy at open signal. Let's take a look though before we get to that. The relative strength indicator, we want to see it 40 and rising. It's at 62. It's not at overbought territory yet. MACD's got a nice positive cross, headed higher. Momentum Timer Pro. Now it takes all these things like the RSI, MACD, and other technical signals and smooths them all out for you and tells you it's got 7 consecutive daily buy signals, and that paired with our CTA Timer Pro. So here's our machine positioning down here. This is our fast algorithm. This is our slow one. We told you on our machine positioning, because what's really different here is we run a historical overlay. None of the other machines do. We told you where they were going beforehand, and then down here below, over the last 7 days, you see this is our Momentum Timer Pro report, giving you 7 daily buy signals from a momentum perspective. That triggered a buy to open on November 3rd. That trade is currently up 1.7%. We've got stop loss set at 427. Friday's closing at 440. Upside target 452. Downside target at the 200-day moving average at 424. Let's take a look at the charts and see where this thing could go because it's got nothing but upside. Let's start out with a 5-year chart. We don't look at this very often, but what I want you to see here is this is that beautiful bottoming pattern. You've got your left shoulder. You got 2 of them. You got a head. You got some right shoulders. You've got a neckline here where those 2 purple bars are at, and guess what? It broke out of that. That is a bullish setup, saying that there's lots of share accumulation here. Now, we warned when the market rallied up to this point and sellers emerged, because this is what you see is called a supply zone. If you've never seen one of these before, it's where sellers are at. So buyers below, sellers above, sellers drove prices down. And look at this red bar here. This is the volume profile of the last 5 years, telling you the most concentrated amount of buying is right at that neckline. So that's very critical. It came down. We said if it comes down here, reload. This is where you want to be bullish because this is very strong. The buyers came in, sure enough, right on target. We see the corporates now. You've got the machine positioning. You've got to run right up here. The 152 is our next target into the supply zone. If the sellers don't hold here, then what you can make the case is they're going to break out and you're going to take a run at the all-time highs. And again, you're going to see this in the backdrop of slowing economic data. It's going to give people a lot of hope that the next big bull market is here. And the next thing you know, the whole thing comes unwound. That's why we typically see double tops leading, of course, what we know as major bear markets. But let's continue on and take a look at now the QQQs and see what's going on with the tech stocks, because we know they're big buyers of their stock. And this was one of the trades we didn't get stopped out on, which I was happy to see. But let's take a look. Momentum's positive. RSI at 65, still not at overbought yet. MACD's beautiful positive cross. Momentum time bro, 7 consecutive daily buy signals. But remember, we didn't get stopped out because I put the stop losses lower, but we triggered on the S&P. We still got back in. We followed the signals. Remember, the signals are really simple. What happened on November 3rd? Our machine positioning was at max short. We tell our subscribers. And again, there are 5 coupon codes for both Momentum Time Pro and CTI Time Pro. Links in the description. You get 1 free month. If you're one of those lucky 5, you can grab them now before they're gone. And let me tell you this, we had a subscriber start late October. He sent me an email, Steve, I'm about 14%. I've never traded really before, and using your tools, this works. How does he do it? Real simple. He looks at CTA Time Pro, sees the max short position, and when it short covers, he goes over Momentum Time Pro, waits for 1 daily buy count on it, and then he buys. Just like that. What do we see? And that's how it worked on the S&P. But on QQQ, we held that trade because it didn't trigger a stop loss. We held our October 9th buy it open. Many of you said there's no way that's going to work, and it's up 4.4%. How about that? We got our stop loss level at 364, so we can hold that in the black. Upside target. Well, guess what? We tagged that Friday's closing. Look at that, right on target. Upside 387. Let's go say 388. Downside 50-day moving average. And you know what? You can look at our machine positioning. We led what those machines are doing. We give you that historical overlay. We give you all the advantages you need. And what are we saying? Next target here is 390. That's way up here. That puts you in striking range of all-time highs and breaks out just above what looks like a bull flag to me. So here you see the flag bull. And we talked about this setup last week. There is the bull flag. It has to break out over the shorts here, the shorts here, and the shorts here. And the next thing you know, you've got a nice run all the way up to the top. And look at this 5-year volume profile. Look at that. I just noticed that right now. Here you can see most of the buyers over the last 5 years right near the top. That means there's a lot of sellers that are going to get flushed out, and be prepared. They're going to play chase with this market going higher. But let's take a look now at the bond market, because the catalyst there is huge as well. And if you see interest rates coming down, that's going to be a tailwind for equities, because that's what people believe. And of course, these CTAs are short a whopping $300 billion worth of bonds. And here we can see 3-year, 10-year supply and 30-year supply all rising, but 10 and 30-year will be the most heavy. Post those auctions, November is looking light. We may see buy the dip price action in bonds if we get any. Goldman Sachs estimates 37 million in net supply in November, compared with 85 million in September and 72 million in October. And that tells us, unless data surprises strongly to the upside, we know it's not going to happen. Path of least resistance right now, higher bond prices. Let's take a look at this. Green sweep, flat tape, mean prices don't move. 54 billion to buy. That's a healthy number. Up tape, 94 billion to buy. And this is, again, global bonds. How about this? Over the next month, you get what they're calling a neon green. This means if you're not trading bonds, if you're not using our reports, which we give you the signal on, we'll talk about that here in a moment. You've got to get in on this, because we tell you exactly how to use our tools to be a successful trader. Look at this flat tape, 108 billion to buy. Up tape, 475 billion to buy. This is huge and a big opportunity if you're a trader. Let's talk about TD Securities on the 10-year, over 109.75 to buy. They're not there yet, but at some point when it reaches it, look for them to cover. You can see these green bars here, they're pretty short, particularly the 10-year, like everyone else. How about Nomura? At 111.41, their buyers. See all that red? Those are called max short positions, just as we're telling you. Let's take a look at our screens, though. For TLT, momentum remains positive. Now, RSI is 54. This has been slowly rising. This is good. MACD's got a positive cross. Momentum Timer Pro, 8 consecutive daily buy signals. This, paired with our CTA Timer Pro, added a position on November 2nd. Now, because we did not start this whole thing with a stop loss, We are down 8.5%. However, if you are just jumping in on this November 2nd trade, you're already in the black. Just follow the reports. And key here, the reason I'm showing you these trades without stop losses, because too many of you don't use them. You've got to use them. And for those of you who don't and you make mistakes, I'll show you how to do a recovery trade and just stick with the reports, follow the system, and it'll work for you. Here you can see upside target 90 to 80. That's unchanged. Downside target 21-day moving average. You can see our machine positioning on our fast algorithm is already leading the market higher, telling us exactly where all those machines at Goldman and everyone else are going to follow. Along with our Momentum Timer Pro report, you've got, of course, everything you need to beat the machines, and that's what's critical here. Let's take a look at TLT. We got to zoom in. We don't need to look at the 5-year chart or the 2-year chart. We need to look at the 6-month chart, because what we're seeing here is a test at the 50-day moving average. Now, typically, when prices reverse, they get up to a moving average, such as the 50-day, and this tends to see sellers emerge. If this holds and breaks through, you're looking to cover this gap up here. This is our upside target. And then what you want to see is a pullback, probably right around the 100-day moving average, come down, re-tag the 50, and rebound. But look at this, momentum on the RSI is solid, on the MACD, everything is looking good. Let's zoom in, and let's see where the volume profile is. Over the last 10 days, it's underneath. That's telling you buyers are coming in here. Let's look at the last 30 days. Buyers are underneath. That is solid. How about the last 90 days? Well, the last 90 days, they're right here at what looks like a neckline of this chart pattern. Here you have a left shoulder, a potential big head down here. Maybe we get a pullback into a right shoulder and then rally, but you can see the sellers all right here, just under 90. You break through the sellers, you've got some upside momentum, and that is exactly what we think is likely to come. Let's take a look at gold. Many of you are bullish on gold, and we're going to make the case why we think that you might be right this time at buying above 1965 an ounce, selling below 1930, giving, of course, the machines a striking distance. Notice the buying number goes down a little bit. This is likely to trigger, particularly if you get some momentum behind this market. Lower interest rates would be actually a big catalyst here to push gold higher. So let's take a look at our screens. We have GLD. Momentum is negative now, at least in the short term. RSI is slowing down to 45. MACD's got a negative cross, but don't worry about this too much. Momentum Time Pro, 3 consecutive daily sell signal. Now, if you followed what we were showing you on October 12th, you bought it open. We raised our stop loss. You got stopped out on Friday for a nice little 3.2% gain. That is great. Upside target 182. Downside is 178. So how do you trade this now? You wait till you see our machine positioning settle down. You wait for momentum to settle down. When they switch and they both confirm, that's where your buyers. Let's take a look at gold here and see what is likely to happen. Because one thing everyone's looking at here is you got this left shoulder, you got this head, you got this right shoulder. This is a bearish setup, and we said that. And price came down. Everyone said, no way, it's not going to happen. Sure enough, it did. We said it would likely rally. It took off, and we got a gain out of that. And it came up and it tagged that neckline. You see that purple line we drew in there? That's the neckline. It's coming down here into this 2-year volume profile. Now, if it holds this, you're looking at a potential left shoulder, head, right shoulder reversal here that negates this big pattern here, and there's a lot of people that are short this. So we're curious to see how this sets up. We don't have any call on it at the moment. We'll wait and see until momentum turns and our machine positioning turns. But for the moment, we're not in that, but we're looking for an opportunity to get back in. Same thing with GDX. Now, this was I was really bullish on. You may remember, and we got stopped out for no gain. We had a nice little gain, got stopped out for none. And what do we see? RSI continues to slow down again, setting up a potential reversal here. Now, it's important to understand these gold miners, they don't really buy their stock back. So they're not big on that because they're putting it back into production and mining. But if the market rallies, they tend to go with it. So that's the key, and we're looking for in this setup. Because you can see in our own machine positioning is still selling down. So, of course, what do you want to do? Wait for a reversal. Wait for Momentum Time Pro. Again, you're one of those 5 lucky people that get a free month. You may be like that trader. He said he's up 14%. He said, Steve has already paid for the whole year. Well, he's like, I'm in. And here we can see upside target is a 200-day. Downside target, we remain unchanged at this. But let's look at the chart setup, because this is what I'm mostly interested in with GDX, is where it settles down here. Because if it holds here again and takes off, that's your bullish setup. In fact, you've got a left shoulder, head, right shoulder for me. You got your neckline somewhere right here around, 29 to 30. We'll just say somewhere in there. This becomes a bullish catalyst to the upside. Again, negating. You notice there's a lot of similarity between gold and gold miners. Well, there should be, because one mines the metal, and that's really critical here. Let's continue on. Because the dollar, we're seeing a switch in the dollar here. Momentum is negative. RSI is indeed slowing down, 53. MACD's got a negative cross. Momentum Timer Pro, after popping a buy signal, is now back to a consecutive daily sell. We have no position in this, but we did say you should take the opposite. UDN is short dollar. On November 6th, we have a buy it open. We're down 0.64%. That is meaningless in the big grand scheme of things. I think this turns out well. Upside target for dollar is at 30. Downside is 29.35. And again, we like our position on UDN. We're going to hold that. Let's take a look at what's going on with UUP. You see what looks like a topping pattern here. It's slowing down. Let's look at the 10-day, and you see there's some buying underneath here a little bit. Let's go to the 30-day, and there's where you start to see sellers emerging here at 29.85. How about the 90-day chart? There you go. Sellers are coming in here. And that's why we remain bearish on the dollar, particularly since everyone thinks the Fed's in control of it. Well, that actually means that they think the dollar's going lower because the Fed is likely to cut. And if that is true, if the dollar goes lower, well, our platinum trade is going to come out a winner. Momentum is negative. Many of you comment, Steve, you picked the wrong one. This one's never going to work. Well, wait and see. RSI, you are now in oversold territory. MACD's now negative cross. Momentum Timer Pro, 3 consecutive daily sell signals. We're almost at max short here on our CTA Timer Pro. So you know what that means? Gives us another opportunity to dollar cost average back in to reduce this. Here you see add on CTA and Momentum Timer Pro. Currently down 9.7%. Not too worried because the dollar goes down. That usually is a catalyst. But wait till you see the chart set up here. It is incredible. And the other key factor is you just stick with the reports, dollar cost average in until you get back to your or close to your point where you bought, and then get out. But look at this RSI sitting right at oversold. How about the MACD? Negative cross. Look at this 10-year chart. You can see this is where you want to be buying platinum anyways. You got a steep decline. And what does that tell us? That once buyers step in and reverse, we're going to look at our reports, add another position, dollar cost average down, and eventually either close out for no gain or for a profit. We'll see what you think. I know many of you say there's no way this is going to work. Well, hang tight. You'll see. And with that, I'm Steve Van Metre. Thanks for watching. Thanks for being fans. Bye now.